So last week was school vacation. We were away for several days with the wife and kids, and as it is with most times when I'm on vacation, I don't really do any trading. However, when we came back over the weekend, in between my little one eating her snack and bedtime, I decided to hop on the charts just to see if I could make a little bit of money before retiring for the night. So for today's video, I'm going to be sharing with you my live trading session that occurred on a Saturday evening when markets were closed. So granted, we're dealing with OTC trading. Now, we recently posted a video discussing the pros, the cons, the benefits and disadvantages between trading live markets and OTC. So if you haven't seen it, I highly recommend that you do it. For those of you who are familiar with my trading style, I prefer to trade live markets over OTC. However, trading OTC markets does present its advantages. So in today's video, I'm gonna be sharing with you my most recent results trading OTC. I'll share with you the live trading footage. We're gonna break down the trades as well as the results. But more importantly, we're gonna break down the strategy and the rules that need to be applied so that way you can apply this to your trading. If you enjoyed today's video and gained any value, like and subscribe. And don't forget to check out our trading resources down below in the video description, including our trading academy, free training, links to free demos and brokers, and much more. And as always, if you decide to try out this strategy for yourself, we would love to hear from you. Share with us your feedback by commenting down below. Let us know how this strategy worked for you, because even though I have fun sharing with you my experience, I know many other viewers would love to see the experiences from other viewers. But without further ado, let's get started with today's video. Now, this session was done on the Pocket Options platform. Pocket Options is by far one of the most popular brokers in the industry for the fact that they've been around for many years, and it's one that I've been personally using for over 3 years. They provide a simple and easy to use interface for navigating and trading the binary option markets, easy functions for adjusting your expiration times, your dollar values, with higher and lower buttons for your buys and your sells. They have an extensive list of global pairs that you can trade 24 hours a day, 7 days a week, in addition to cryptocurrencies, commodities, stocks, and indices, all of which provide competitive payouts for high profit returns. They have a great selection of various indicators that you can use and incorporate to your trading regardless of whatever strategy you're using. Free $50,000 demo accounts, which you could use anytime for backtesting and practicing various strategies and trading methods in a risk-free environment. And best of all, Pocket Option services are available for many countries around the globe. So whether you want to use Pocket Options for their free demo accounts or use them for your trading and start earning profits through the binary option markets, you can access all of their resources down below in the video description. Starting off with our first trade of the day, this was for USD JPY. We had the buy confirmation signals based off the indicators, which we'll be teaching you later on in this video. More importantly, I took this for a buy because price was above our 200 moving average, and we also had a bullish engulfing candle which reacted off of our 200 moving average. So this is a prime example of how moving averages can at times serve as a level of support. So because of the multiple levels of confluences we had in this region of the market, we took this for a 1-minute buy, and as you can see, this was a profitable trade. Next trade was for GBP JPY. We took a 1-minute sell in this region because first and foremost, we are in a seller's market. Price is well below our 200 moving average, and we had overbought conditions of our stochastics. So we entered for a 1-minute sell, and although it was a close trade, this trade still closed in our favor for a profitable 1-minute entry. Next, we're trading Euro USD. Now, this is a classic example of a counter trend trade because although the market is above our 200 moving average, we took a 1-minute sell because of this bearish pattern known as a double top, which also rejected our supply zone. So because the buyers were exhausted, we took a 1-minute sell, and as you can see, this closed in profit. Next trade was for Australian dollar, Canadian dollar. Now, price is below our 200 moving average. We're in a seller's market, and we can see that price is consolidated between these two levels. We got the sell signal confirmation of our moving averages, which also aligned with the crossover and downward momentum of our stochastics, and as a result, this trade closed deep in profit for a 1-minute sell. Now, this was a tricky area in the market for Euro USD. I was trying to capitalize on a bullish divergence because of the opposite levels of structure that we were seeing between the market and our stochastics. We had a wick rejection, so I thought this would have been an opportune moment to enter for a buy. Unfortunately, price struggled to push up and ended up crashing back down to new lower levels to test a new demand zone. I took a second 1-minute buy position because of the divergent structure between the market and our stochastics. So even though our first position closed in a loss, price eventually pushed up exactly as we had predicted due to the bullish divergence, which resulted in our second buy to close in profit. Coming back to USD JPY for our final trade of the session, this is a prime example of the multiple levels of confluences, not just the buy signals provided by the indicators, but this was also a trend continuation trade as a result of price reacting off of a previous supply zone. We entered for a 1-minute buy, and I'll be honest with you folks, this trade made me a bit nervous because I was very confident in this trade, but you'll notice that price was struggling for a bit and even tried to push down to lower levels. Fortunately, in the last 10 seconds of this trade, we finally got the impulse move to the upside that we were expecting, which resulted in a profitable 1-minute buy. So as you saw from the footage, it was a profitable session, resulting in 6 profitable trades and only 1 loss. Under trading history, we can get a better reading of the data of the trades that were taken during that session. And I want you to notice that based off the timestamps of these trades, where the first trade was taken at 3:43 and our last trade was executed at 3:59, this session only lasted about 15 minutes. Within this 15-minute trading session, we took a total of 7 trades, losing only 1, which resulted in an 85% profitability win rate, allowing me to capitalize just over $4,100 in profit. And again, folks, this session only lasted 15 minutes. All right, so let's go over the rules and discuss the settings, parameters, and rules that we need to follow to apply this strategy to your trading. First things first, you're gonna come here to your chart. I like to use this strategy off of a 30-second time frame. So if you come here under time frames, click on S30. This means all of the candlesticks represent a 30-second time period of price debt. However, we are targeting 1-minute expiration. So if you click on this tab, click on the little flag button, and it'll allow you to choose a specific expiration duration. All right, so again, for this strategy, we're selecting 1-minute expirations. Now we need to add a few indicators to our chart based off of the rules that we're going to be following for this particular strategy. These are going to help us identify our buys and sell signals, and they're going to be a set of 3 moving averages. So to add the moving averages to your chart, come here to the indicators tab, and you're going to select 3 moving averages. All right, now the settings are as follows. Our first moving average is a 2 moving average, which I have set to a color of white. Second moving average is set to a period of 5, and this one's set to a color of blue. And our third and final moving average is the 200 moving average, set with the color of green, which is the long one that you see here on our chart. Now, the first thing we want to consider is the trends, because we want to make sure that we're placing trades according to the trend that we're in. This is where the 200 moving average can come into play, because when price is below your 200 moving average, these are areas where you only want to be looking for sell signals. A sell signal will occur when your 2 moving average crosses below the 5 moving average. So just based off of those parameters, we have multiple sell signals that occurred in these regions. However, we don't want to just rely on the moving averages alone, because at times moving averages can provide false signals, which is where the stochastics comes into play. Come back to the indicators tab, click stochastics, and then we're going to adjust the settings to periods of 5, 3, and 3. The stochastics oscillator is going to play the role of confirming the sell or buy signals that we receive from the moving averages. So if we were to get a sell signal from the moving averages, we want to ensure our stochastics are towards the overbought levels of the stochastic histogram with crossover and downward momentum, as we see here and here. These 2 examples would have been profitable sell trade entries. Now, we had a crossover of the moving average in this region. Let me just zoom in here. We have a sell signal here of our moving averages, but we didn't take this signal because our stochastics were fully oversold and we didn't have that crossover and downward momentum. So because of that, this sell signal would have been invalid. Now, as we move forward, we can see other prime examples where we get the sell signals from the moving averages, and at the same region with overbought conditions of our stochastics, which would have resulted in profitable 1-minute sell trade entries. Now, if you remember from the live trading footage, I showed you an example where the 200 moving average can serve as a level of support or resistance. And here we have prime examples where we have the confirmations of our indicators in addition to rejection of the 200 moving average. So if you receive a signal after a rejection of the 200 moving average occurred, these are opportune moments to take that buy or sell order, depending on what trend you're looking at. Now, if you're in a buyer's market, you want price to be above your 200 moving average to confirm that there's buyer momentum, and your buy signal will occur when your 2 moving average crosses above the 5. But before we ensure a trade, we want to ensure that the stochastics are in oversold conditions at the lower level with crossover and upward momentum. Once you have those 2 levels of confluences, you enter for a 1-minute buy. And as you can see, based off of those parameters, these are prime examples of profitable 1-minute buy trade entries. So ladies and gentlemen, those are the rules of this particular OTC strategy that I primarily use a majority of the time when I'm trading during off hours. And it's these very same concepts that we just went over that allowed me to capitalize a little over $4,100 in a matter of 15 minutes using this strategy. But a couple of things to remember. First and foremost, if this is a strategy you want to incorporate to your trading, make sure that you practice and backtest this on a demo account, so that way you can get a feel as to how this will unfold in a live market environment. But more importantly, as I shared with you in my live trading footage, remember to add other levels of market confluences confluences, which results in your trades closing in your favor at a higher profitability. And yes, structural market confluences are applicable even during OTC markets. If you really want to take your trading seriously, this is something that every trader must learn, and this is just one of the many things that I teach my students. All right, traders, that concludes our video for today. Hope you found it helpful and gained some value. Again, if you have any questions, reach out anytime. And don't forget to check out our trading resources down below in the video description. And if you want to check out some of our most recent videos, you can check out any of these videos here. Thanks again for watching. See you on the next one.